Are Homebuyer grants better than forgivable loans for first-timers? If you are a first-time homebuyer, you might be wondering which assistance option is best for you. Homebuyer grants and forgivable loans are two popular choices, but they work differently. Let's break down the details to help you make an informed decision. Homebuyer grants provide a one-time cash sum that you do not have to repay. This means you can get immediate financial help without worrying about future obligations. These grants are often offered by government agencies or nonprofit organizations. You can use the funds to cover part or all of your down payment and closing costs. While some grants may require you to live in the home for a certain period, most of the time, the money is yours to keep if you meet those conditions. This straightforward approach makes grants appealing since they reduce your financial burden without adding debt. On the other hand, forgivable loans act like second mortgages. You do not have to repay them if you meet specific conditions. Typically, you must live in the home for a set number of years and make timely mortgage payments. Portions of the loan are forgiven incrementally over a period of 3 to 10 years. If you move or sell the home before the forgiveness period ends, you will have to repay the remaining loan balance, sometimes with interest. This option can provide larger amounts of assistance but carries the risk of repayment if you do not meet the conditions. When deciding between grants and forgivable loans, consider your financial situation and long-term plans. Grants offer immediate funds without repayment risk, which is great for those who want to avoid future liabilities. If you plan to stay in your home for the required forgiveness period, forgivable loans can be beneficial since the loan will eventually be forgiven. It is also essential to look at the availability and eligibility of these programs in your area. Some grants target specific professions or income levels, while forgivable loans may have income caps and home price limits. Another factor to consider is how these options impact your mortgage terms. Forgivable loans, being second mortgages, can sometimes affect the interest rate or terms of your primary mortgage. In contrast, grants typically do not have this impact. In practical terms, first-time buyers should evaluate their financial situation, homeownership timeline, and local program options. Grants are generally better for those seeking straightforward assistance without repayment risk. Forgivable loans can be advantageous if you are confident you will meet the conditions and want access to larger assistance amounts. Both options aim to make homeownership more accessible by reducing upfront costs. Understanding these differences will help you choose the program that best fits your needs and circumstances. Consulting with a mortgage professional or housing counselor can provide guidance tailored to your situation.